Good morning, everyone, and welcome to the Morning Edge webinar. I don't see the note here, but as I had mentioned earlier in the week also, is that Blake is out this week. He's at Disney with his family. He'll be returning back on Monday, so I've been filling in for him this week. So I'll be filling in for him today. We'll keep the same, as I mentioned before, we'll keep the same break format that he does. That way everybody's kind of on the same page. Yesterday I had a late break because I was also doing the opening bell for Kip, so that was a 3-hour show. So, but today will just be the Morning Edge. So we'll take a look at what's going on. We did see the euro dip. I actually went right to our 984 area, but I was looking for it to go a little bit lower because I wanted to go in and get long. So I was watching as it broke lower, but I thought we were going to move into at least the low 70s. So we'll see what happens. We did see the yen sell off pretty good. I was telling people yesterday afternoon after the post FOMC minutes, the market was moving around a lot, but not a whole lot was happening. And I told him we should see the longer jam break up in the next 24 hours. And I was referencing about the ZB, the bonds, and the potential that it looked like we finally we put in a bottom to negate this downside action. And then to be watching the bonds, and I was talking about the dollar yen, I may see something here in the Asian session, which is exactly what we saw. I posted a chart for the guys in the chat room. When we hit that 462 area, it's 462 to 42, and the bonds are going higher. And I posted that would be a good area if the bonds are going higher. For a good risk reward for a drop, and we saw quite the drop. We also saw the gold rally off of that initially, and we saw the euro rally. And then since then the euro fell off, and we're looking at a range extension that took us down to about 963. Our zone was 963 to 982. So. But it only made it down to 984. If we look on the 2-hour chart, that's where it's the top of the zone. So it found support there. We'll take a look at what's going on overnight as far as news. And cable seems to be rebounding here at the moment. Sterling was near a record low in the trade-weighted terms on Thursday as the focus turned to the High Court, which will hear a legal bid to force the government to seek parliamentary approval to trigger a formal Brexit process after a steep sell-off in the last 2 weeks caused by uncertainty over Brexit. It says the pound surged as much as 1.5% against the dollar and the euro on Wednesday after Prime Minister May said she would allow lawmakers some scrutiny over the process. Well, she's just backtracking. We already talked about that. That overt tough talk of hers really got the pound really selling off. It's what I warned about last week. Well, I was thinking that the worst it could get down was to the 126. But she came out with that tough talk, and she was even ratcheting it up to a certain extent as we came into Tuesday, and Reuters had posted that story. And then later on that day, then we saw the markets really coming apart. Trader said considerable certainty was prompting investors to stay clear of the currency. They meant to say uncertainty. A second hearing legal challenge against the government for its stance in Article 50, led by pro-EU investment fund manager, will take place at the High Court on Monday, but it's not clear when a final decision will be made. Investors for Brexit could hurt trade and foreign investment needed to fund Britain's huge current account deficit, one of the biggest in the developed world. This suggests there will be heightened uncertainty around the pound as a spot trader at a European bank, and that the specter of a hard Brexit where Britain, the EU, was likely to see the market starting to weaken further. Other than that, there's not really a whole lot of news overall. So we'll move into what we see for the reports coming out, and then we'll move into the charts. German inflation came in right in target, 0.10, Reuters poll was 0.10. We do have import and export prices coming in, as well as initial jobless claims. And they're expected to tick up a bit. But the prior number was only 249, which is amazing, which was a little bit surprising why we didn't see an even better NFP number. Most everybody expected a pretty good number. I expected, at least right around 191. Maybe we could even get up as high as 209. So I was a little bit surprised. That was, I think, the number came in, 157 or something like that. And we have a Canadian New Housing Price Index. So really not a whole lot moving. So we're going to move into the charts. So you can see here the euro went right to the top of the zone, the 984. And I was commenting to Mark Dow early in Asia that we had this zone here of 963 to 984. Because at the time it was trading above 110. I think it was trading at 10.11. And my point was it's going to have to take out 110. And I had mentioned that in the July FOMC, we had, I think the low on the July FOMC was, I believe it was 962. So I thought we were going to play, the pattern was playing out very similar. We saw a continued sell-off going into that. And I remember the day of the FOMC, it was kind of jumping around and in very tight ranges. It was scalping it around. And when it came out, we just took a fast dip. And then we popped back up, then we dipped again, and then before then, we started moving higher. And the price action right after the minutes was a little bit surprising in a way, but we stayed relatively weaker, and we stayed in a very tight range. And that's why I thought we'd end up pushing lower. And we would take out 110. They would need to take out 110, but I thought, my take was why I didn't think that we were going to stay down there that long is because of the price action you were seeing in the bonds, and I'll go to that just to give you an indication of what had me thinking why we would find support between 963 and 984, and you can see 984 is the top of the zone here, which would then be support. You see right in here, these touches here, so there's my 984. What people don't understand, I've gone on and talked a broken record about these levels, is you see certain, different levels in here. And some people say, well, there should just be one big level here, another big level there. What you're looking for is and a good example is the dollar yen, is the price structure of a market, and is it coming into a big level, and do we see something being set up by that? And then you can go and determine whether you can actually see the market move or hold into a level. And I'll tell you exactly what I mean was, because you look at this 984, and my take was it's going to find support between 963 and 984. So when we switch over to the bonds, my thought was that the bonds were already well overdone. If you come over here, we've talked about this. We've seen this huge fall. I mean, just absolutely huge fall. From 170.05, and we came as low as, basically, I think it was at 63.19 or 63.18. My support was 63.16 and 03. The point is the fall from here to here per contract is almost $7,000. And look, this was as of only September the 30th. That's a hell of a large move. But the point is I'm just trying to put that in perspective. I end up bringing that up every day. But the point is, it was a huge move over a relatively short period of time. And I talked to you all yesterday about how I thought the 63.27 would hold, and it did a little bit beyond the 63.27. Then it came up, I thought, okay, I was looking for us to find support. Initially here was for 63.16, and as it came low, I was like, well, forget this dog, and we're going to see how we would react into the minutes. And immediately it started rallying after the minutes. And my thought was, you know what? I think we've got a bottom in place. And if we've got a bottom in place, and the whole move down here was U.S. rates increasing, which would be beneficial for the dollar. And what have you seen here? Might seem like I'm doing it oversimplified, but I want to get the point across. And what have we seen here? And this is on a 2 hour, well, that was on a 15-minute, 30-minute. You see here, the same thing here. Because the dollar's strengthening with interest rates going higher. So my take, going back to the bonds, was, despite what was happening yesterday, because yesterday, after the minutes, you were seeing a lot of action in a very little small range. And my thing was, hey, you know what, the bonds are holding up. And they got up to like 64.09 or something like that, or 64.08, and they started sliding back down. They said, they have to hold the 64 area, or it's back down the tubes again, which they did. And then as we start to go in towards the very end, well past equities close, we saw the bonds continue to move higher. And as we came into, when we started moving to Asia, it just kept on going higher. You see what I'm saying? Is we're just marching higher, just blowing and going. And what I told the guys was that we needed a 4-hour close above 64.24. If we get a 4-hour close above 64.24, this is on a 4-hour chart, a 4-hour close above 64.24 will have confirmed this bottom and will open the door up for a recovery rally. Well, then that would reverse dollar positions. I mean, the direction of the dollar. Thus, and let me jump back in here. I guess I'm doing this twofold. Thus was my take here in the dollar yen. Move this up here. Now, you know, I've been saying, I don't believe in the dollar yen. This is all about the ZB, being the bonds. Well, I was pointing out to the guys in the chat room, I was saying, hey, look, we've got an area here. And if you look here, you see this area here. And that's why, like, you'll see, well, there's a lot of levels. Well, no. What I do is I watch the markets that move from these zones. And as I start to break out the zone, I'm thinking, hey, look, they've already come quite a ways and have barely pulled back. We're coming into an area right in here. You see all this activity right there? That's a lot of activity right there between 0462 and 0486. So what I was telling the guys was, hey, look, this is going to present a very nice risk reward if we come into this area and the bonds continue to keep rallying. Because this whole move in the dollar yen was a byproduct of what had happened, and you saw the massive sell-off in the bond market. Because the last few weeks they haven't even been paying attention to the BOJ. That's the same. That bank has no credibility. Nobody cares what they say. This has all been ZB related. So my take was, if you get here, then we're going to go and see a very nice sell-off. And sure enough, that's exactly what happened then. Then, within quick order, you saw the market going and sell off more than 100 pips. This market was really overdone. We've kind of come back a little bit here, but so that was my take here. So going back to the bonds, and I think, which I would have expected more action post FOMC minutes, and we were getting it. And I was telling them, hey, don't worry about it, you know. I told them this logjam is going to break up within 24 hours, I believe. And that's what we saw. And you can see here how the bonds have played out. Because we had this area here. Remember, we discussed this as 6402 to 6327, a very nice little zone in here. But the market just wasn't ready for a bottom yet. We still had the FOMC minutes, which were expected to be hawkish. So I had the 6316, which it didn't get there the day before, and the market started to slide back. And this market was just clearly oversold after this big sell-off. So basically you have like essentially like a little double bottom here, and then the market being oversold. And you see this nice rally here, and then it adds on it to it with another solid white bar. But we were able to close above the 64.24. If you look at here, here's the significance of the 64.24. Right here. You see here? Just basically quite a few touches, not that many bodies, but for me the key is that the prior high had taken us to, and that was this one here, when it looked like we might have a bottom in place, had taken us to 64.23. And that was a high. So my take was, if we close above this high, and we already have all these touches here, see all here? This will open the door, because we were already expecting 27 to hold it. It went beyond that, and then it came back here and tested. And then after the FOMC minutes, actually last month when we had the FOMC, the bonds had already set the low for the day, and then once they released the FOMC, it took off like a scalded dog. So I said, you know what, this is playing out the same price action as that we had already seen. So then you see this bar, and you see another solid bar, and we're taking out 64.24. That was my take. I go, boom, that's it. And it was here at 64.23. I go, this is it. This dollar yen is selling off. Yeah, and at the time it was trading at 04.46 or 43. and then all of a sudden it loses a quick 50, it loses 75, and then it's on like Donkey Kong, like Blake likes to say. We saw the rally up here, but don't forget, someone might say, well, now it means it's going to sell off. They're already going to be trying to buy the dips because this solid close over 64.24. And notice how the market came back here. And even though it got down here, it pushes it back up and it's tested it. But this is being supported because this was the previous high, 64.23. So now, getting back to the euro, I didn't expect the euro to I didn't expect the euro to rally to the extent like the way the dollar yen had, because the dollar yen was basically all, I've been saying for the last week and a half or so, it's been all about the bonds, the ZB. It has nothing to do with the yen. And we did get a rally, but I thought they're still hanging above 110. They're going to still have to test below that. And I thought, okay, this is that area, 963 to 984 is where you're going to go in and find support. And we can look into this and dissect this further, how I come up with these levels and zones, and where I use those as targets as we take a closer look into the euro on a 15-minute chart. Okay, here's the euro on the 15-minute chart, and you can now see what I'm talking about. Here's 982. Now on the 2 hour, it's 984. And here's 960. But the zone I was talking about is right in here. Now, what I did was, earlier in the European session, I took the range here that had been in place and just extended that. And that would have come right down here to 962. Now, the zone that we've been talking about, as I said, was 963 to 984. Now, I've got it marked here as 982 on the 15-minute, but it's the key. I'm looking on the 4 hour, which is, for me, it's 984. Which is right where we came down to, but I thought that the market, when we came here, I thought we'd at least have to do at least one more dip here, which would at least take us into the low 70s, if not down to 60. And then we could go and work higher. But, like I said, we launched them right here. So we basically come right into that area, that 984, the top of the zone. And my zone was 963 to 984. But, I mean, on the run-up in the bonds, I did get long the euro for a quick 20 pips in the Asian session, but I did not get short anymore. I wasn't sure. Actually, I was thinking when I got up this morning they might even be higher, but they slid back down. So I'm thinking, okay, they're still going to press 110. Let's just see what happens. They'll probably do it sooner than later. Eventually, did start to slide past 110, but I thought that we would see a retest here and drop us into about the 970, low 970s, 960s. Obviously, that wasn't to be. We'd come right back up. We may test back again. 1007 is going to be huge. on the test back. We did go sub 110, so we were able to go and satisfy that. Probably that's going to be all she wrote. I think the market will be very well supportive around 1007 if they even make it down there. I still think we're going to go higher at this point, which I was talking to some people said. I think once we get down there, which I would have preferred to get lower, the first area of resistance is going to be this 1070s, right around 1080, and you can start to scale in. Maybe on a good bounce back, they could eventually make it to 1136. So I guess we'll go in and fill out the. I didn't do that yesterday on the fill out the bias chart. So support is going to be, which I already had that marked off for mistake. 1060 to 1085, 1084 was the low, and resistance I had that marked as 1075. I'll leave that 1075. I think that's the initial resistance. Although I think on rallies back, right? I think that's where you would start to go on and scale in short. I think you'll see the market above that is also going to be 1115 up to 1115. I'd say 1105 to 1115 on there. But for right now, 1075. So that's fine. I can leave it as is. It's already time for a break, and so we'll be back shortly. Give everybody a chance to get some water, tea, coffee, or whatever, and we'll be back shortly, and we'll start covering the other majors. Thanks for joining us here on the Morning Edge. As I said, filling in for Blake for the rest of the week. He'll be back next week, and then next week I'll be back on the European crossover.